Hello everyone, and thank you for joining me in today's webinar. It has been 2 weeks. I haven't had this weekly webinar. Yeah, I was a little sick, let's say, but I'm back to discuss markets and check what is the latest. Quite a lot of updates happening in the markets in the last 1 or 2 weeks. So how could we check markets? How could we trade in those very, very high risk and very volatile market conditions? What are the key risk events that we should look at during this week? Everything would be discussed in this webinar. So thank you very much for tuning in. And please make sure that if you have any questions, please leave it in the comment section below. So I'll make sure that by the end of the session, everything will be absolutely attended to. So I see some new people here in this webinar today. Thank you so much for being here with me. And yeah, in case if you don't know, this is Mohamed Yaoud. I'm the Chief Markets Analyst at PU Prime. This is a weekly webinar. We discuss markets, we discuss the latest updates, and we set our expectations for the week ahead using both economic agenda, what are the key risk events that we should look for, as well as technical analysis. And this is something we spend quite a lot of time discussing, which is the technical analysis, especially in those times, how to trade with this heightened volatility and so on. So thank you very much again, and let's start by having a quick look on the economic agenda for this week. And today is Monday, the 23rd of June. And normally, when I check the economic agenda, you will see me always not only looking at the top volatile events when it comes to the volatility expected, but usually I go down a little bit to even the medium volatile events or the medium volatility expected, however, which is 2 out of 3 stars. However, today we'll only be looking at the top risk events during the week, because I personally believe that, yeah, markets, of course, will be looking at the economic agenda and so on. But in those times, when you have major geopolitical tensions happening, those are the events that actually take the market focus. So yeah, this is why, yeah, of course, we'll be having a look on the economic agenda. However, when it comes to the top priority things that we should focus on during this week, of course, it will be the escalations in the Middle East, Israel, Iran, and the US as well, the new party in the geopolitical war, let's say, happening in the Middle East. So this is basically what will be affecting markets the most during this week. And don't get me wrong, this doesn't mean I expect only an escalation on the geopolitical front, but even a de-escalation, which is something we have been seeing today so far. So far, we're still, opening the markets. However, absence of escalation could be very well perceived by markets as a de-escalation. And this is why you can see, reversals in the markets and so on. So you should always look out for either an escalation or an absence of an escalation. This could definitely give you a market to trade or a trend to follow during this week. Hi, everybody. Thank you. And Philip, Fasikul, Ina, and everyone. Thank you so much for being here. And let's start by having a look on the top risk events that we'll be having during this week. And of course, number one comes the PMI, the US PMI, manufacturing and the services from for the month of June. This will be announced basically today in a couple of hours. And as you can see, the services PMI expected to move slightly lower to 52.9, down from 53.7, which is something to be expected in this time of, heightened economic risks in the US, right? And also when it comes to the global manufacturing PMI, also a move lower from 52 points to 51.1, while those both numbers still are above 50 points. And this means definitely they are in the expansion phase. However, a slowing expansion, of course, when it comes to the manufacturing and services. And if you don't know, the key level to watch on the PMIs are always the 50 points. Above 50 measures an expansion. Below 50, it's definitely a recession, right? However, also changes from one month to another will show whether the expansion is gaining momentum or losing momentum, and how the the indicators show the health of the economy recently. And this is, of course, for the month of June. We also have the home sales, existing home sales for the month of May, which is always delayed somehow. And a very, very small slight adjustment is expected, down from 4 million to 3.96. Nothing incredible happening here. Moving forward to Tuesday, we will be expecting the consumer confidence. Really important. And I don't want you to follow the expectations for the consumer confidence, because usually, as per what I notice, is that expectations for the consumer confidence specifically are not so accurate, right? So what we will be doing is we will be looking at the previous reading, which is 98 points. Anything higher or above 98 points might be good for the dollar in the time being. Anything lower than the 98 points is bearish. However, as I said, don't take this expectation of a slight increase to a 99.1 as a bullish signal. It's not, because it's just an expectation. It's not a fact. So we should basically wait for the fact to happen. On Tuesday and on Wednesday of this week, we will be highly waiting for the Federal Chairman, Jerome Powell, who will be testifying in front of the Joint Economic Committee in the Congress on Tuesday and on Wednesday. So really important to listen to what Jerome Powell has to say when it comes to the latest economic developments, the risks on both the inflation and the unemployment, which is the both mandates, right? And how Jerome Powell believes, or the Federal Reserve believes, what's the best course of action to take during the next period to boost the economy, control inflation, and support the somehow weakening labor market during the past period. So most probably we'll be very, very much looking forward to this testimony on Tuesday as well as Wednesday. However, most probably if he has anything really important to say, it's usually on the first day, right? The second day is most often repeated, speech or statements, delivering the same message in another way. However, yeah, both days are important, but on a scale of importance, let's say Tuesday is more important than Wednesday. On Wednesday, we move on to the new home sales. So we have the existing home sales on Monday and the new home sales scheduled on Wednesday. Slight move lower from 743,000 to 692, which is something to be expected. If you're having a weakening economy across the board, you can expect to see weakening PMIs, and you can expect to see new home sales to be dropping a little bit. Moving forward, we also have the crude oil inventories, and this is really critical because what's happening in the Middle East is definitely affecting the dynamics of the oil markets, supply and demand, and everything in between. So we will have to wait and see how the inventories are being affected at the moment, especially that during this week, we can see further escalation of the Middle East tensions. The previous reading for the previous week was basically a decline of more than 11 million barrels, right? Let's wait and see. Will this add more pressure to the oil markets or relieve some pressure from oil markets? However, definitely what's happening in the Middle East is disrupting the supply chain generally, and this will boost the US or the oil prices much more higher, and this is why we're having an upward move by the beginning of this week, right? Moving on to Thursday, it's the durable goods orders, the GDP, and the initial jobless claims. And I would say the GDP, of course, is the most important of all from the first quarter. No change is expected. A slight, let's say, move lower of 0.2%, which is slight recession or slight, move lower on the GDP for the first quarter is expected. And this is something expected to affect the US dollar negatively. Let's say moving forward to Friday, the last day of the week, we expect the big news, PCE, which is the personal consumption expenditures from the US. That's the number one indicator that the Federal Reserve looks for, and for inflation. So, and basically, I'll be looking at the year-over-year figure for the month of May. The previous reading was 2.5%. My personal expectation is that we can see another yet move higher on the PCE readings. Given all of the current circumstances, Donald Trump or Trump's economic policies, tariffs, and everything, yeah, this could definitely affect inflation and push it higher. Let's have a look on the technical analysis. Starting off with the dollar index, nothing pretty much exciting happening here. In the last webinar, I think that was not the last week, but the one before it, we mentioned the support around 97.80, let's say. And at the moment, we can see that the dollar index is holding steady above this level. It's a clear support, clear demand zone here, pushed prices higher to almost 102 points. So when we move back lower, you can expect to see something exactly like what this happened here. A double bottom pattern, a break higher, a retest of the neckline, and a move higher. So during the week, I'm personally bullish on the dollar index because we can go as high as 100.43. And that's that. Really simple and really straightforward here analysis on the dollar index, right? When it comes to the euro, this looks like an attempt to break higher, but it's definitely something that momentum said wouldn't sustain, because momentum was basically not moving higher. So prices were somehow slightly creating new higher highs, or let's say equal highs. But the momentum was basically moving lower. So no momentum enough to push higher. And this is why you have this false breakout. On the short term, again, something seems like a double top here. And we're moving lower. So as long as we break this last low of 1.1450, I'm expecting the euro to move lower against the US dollar. Exactly the same is happening here on the pound. This false breakout is a little bigger than the previous one on the euro. However, again, momentum says that we will not be able to continue moving higher. Momentum is moving lower, and this is why we are moving lower on the pound versus the dollar, right? On a shorter time frame, you can see this is clearly a top formation. We even broke support, tried to move higher, failed to sustain the move higher. So during the week, maybe I can expect to see the move lower to 1.3250, right? Gold is trading near very, very strong resistance levels. And with all my respect to the geopolitical tensions happening, that should support gold. However, the momentum is not there. On the daily time frame, the momentum says that even if prices are moving in a sideways range with equal highs, momentum is moving lower. And personally, to me, as long as we are trading below 34.40, I'm bearish on gold during the week, right? Even by the beginning of the week, you can see we immediately gapped higher, but it was, closed on the spot. Yeah, you can definitely contact customer support. If you have any issues with your account, yeah, this is why we have customer support, not in a market analysis webinar. Yep. I can see some people already told you to contact customer support. So yeah, thank you very much, guys. So gold, as long as we're trading below the 34.40, I'm expecting a move lower. I'm bearish gold. Of course, the other things can happen that maybe we have a huge escalation, but I rule out this probability. So maybe we can touch the levels of 34.40 and then move lower. Anyway, we can expect to see gold trading in a sideways range during the next period, right? I wouldn't say it's to be sold on the bigger time frame, but yeah, we can expect to see a major sideways range happening here. In this case, when you have a similar chart, prices are just moving higher. Wait a minute. Okay, technical analysis say that oil is to be shorted, right? Because the recent upward moves lack a lot of momentum, right? Momentum is not there. However, it's risky to short oil. If you want to wait and short oil, you should probably wait for the last low to be broken, which is still risky. The levels of 74. If we break and sustain trading below 74, it will be bearish. If you want to be on the safer side, yeah, probably we will be targeting the 80.76. What I want to say is, as long as we're trading above $74, this is the make or break level at the moment. Above 74, we are targeting 80, 400 pips. If, however, things see slight de-escalation in the region, we can break $74 and start a major correction for this, whole upward move. Yeah, we can see it this week. Let's talk about the indices. And if you have been, following the weekly analysis for the past month, I've been talking about those supply zones on the US indices, and whether it's the Dow Jones, the NASDAQ, or even the S&P. Where's the NASDAQ? Here it is. Wait a minute. That's the S&P. And that's the NASDAQ supply zone. So as soon as we touch the supply zone on NASDAQ, on the Dow Jones, we immediately went lower. We didn't really touch it on the S&P. It was so close, but this basically happens. But yeah, we are bearish on the indices, the US indices, Dow Jones, NASDAQ, and S&P. We are bearish during this period. Let's say if you want to trade the Dow Jones, you will just be waiting for a break below the last low, right? So we are currently not bearish yet. The bigger time frame says we are bearish, but on the short time frame, it's a sideways range. As soon as we break below the 41,500, I'll personally be shorting the Dow Jones. Similarly, the NASDAQ, of course, you can see kind of a sideways range here. As soon as we break below the 21,500, it's a bearish short entry for me, and so on. So it's basically bearish. So yeah, this is a very brief market analysis here for the week ahead. Please make sure that, please note that during the week, we can definitely see some major escalation or de-escalation in the Middle East, either of which basically can lead to very high volatility in markets, either in one direction or in the another. So please make sure that you respect your trading account, use a stop loss and proper risk management to make sure that, yeah, your trading capital will be safe, let's say, right? So that was it for today. Thank you so much for attending this webinar. I'll see you guys next week. Please stay safe and trade safe. Goodbye.